Welcome, everyone. Thanks for attending the webinar the other day. And of course, we had some good follow-up questions. First question people wanted to know was what's going on with this VIX program that we've developed on the Person Algo Optimizer, and what is its current status on this week's action, which is pretty crazy in of itself if you consider the fact we had, I don't even know where to begin. I mean, steel tariffs, everyone thought that was going to be detrimental to the market. We had resignation of a major cabinet member, Steve Cohen, from the President Trump administration. All of that was just insane surprise information and would drive anyone, if you read headline news, to maybe make wrong decisions. And that's where an algo optimizing system can be extremely helpful because, as I tweeted out, the system was long, and there's the long position. And as the day progressed, it carried the position overnight and into a long. What happened the next day? Steve Cohen, the announcement of the resignation, the stock market gap lower, which sends the VIX product, the VXX, up. So when the SPY or the S&P 500 goes down, this goes up. When the SPY goes up, then the VIX goes down. That's how this works. It's inverse related. So here's the story. It was long. It had a profit. It started to give up the profit, and a new fired off signal went short. And it is still short as of 2, and this is kind of wild, 222. Remember that? That was a TV show, Room 222. Karen Valentine was the star of that show. Anyway, at 222 on a Friday, the product is still short the market. The S&Ps are near their high. Now, is this thing, as you can see, the bottom is a feature of a TradeStation that shows what the closed end equity is versus the open trade equity. And currently we have a big difference of a new equity high in the product itself. What's going to happen? Well, first and foremost, it has a stop function in here designed to not let profits go to zero. Okay, so that's number one. Second off, it has a maximum profit target already set in. So if in case it has an abnormal on average profit, it takes it off automatically and won't trail the stop. So that's kind of what happened way over here back in the beginning of February. We had this enormous profit and it got out. And if you look, it got out near the highs, the thing went back down, and then it started to move back up, generating, and it did generate a new buy signal. So why didn't the darn thing get in? And I'll tell you why it didn't get in. It has another really savvy function and feature that you can set and optimize that. What if a trade is beyond its average or normal loss? If the risk is 2% per $100,000, you're talking a $2,000 risk. Well, let's say you have a risk of $8,000. Don't take that trade. So it ignores higher risk trades. You have a maximum loss function, and if it has too great of a risk, it won't take the trade. That's how this thing missed the upside, which was a once-in-a-lifetime type of move, or once every 10-year type of move maybe. In the meantime, it went short, it reversed, it went long, and it went short. As you can see, it's taken quite a few trades since that point in time. How's it done year to date? It's really been a very nice product trade, both from a perspective of looking at the trend direction of what S&Ps might do, as well as profitability, which is a product that we're launching a fund on as we get into April. So here's the new equity high on this product, and it doesn't even represent today or the open trade equity profit on the VXX. So let's share with you what I was referring to by those tweets. So if you go to the website personsplanet.com and you hit on the Twitter, you'll notice if we scroll back down, we talk about a bunch of stuff. It's been a really exciting week here and a very good week. We said if you want to learn on March 6th about the Amazon, the IWM, or the VIX. And the funny thing is, I'll share with you Amazon, I'll share with you IWM, because we were actually long call options on IWM. We got out and we rolled into the Qs. And we've since exited those. Why did we do that? Well, we sent it to liquidate long call options in IWM. It was a nice trade. We were looking for the Russell to outperform blue chip sector. It did. Then we noticed on March 7th The IBB was getting ready to break out. Watch for longs in Labu, which is a 3-time ETF on biotech, and JETS, the ETF on airlines. It formed a PPS buy signal. Many of you Thinkorswim clients know all about that PPS buy and sell indicator. It's very powerful. And we also noticed that the XAR, which is the Aerospace and Defense Index, also had some buy signals. So then what did we see? We saw some stock picks like, I'm embarrassed to even say, Spirit Airlines, which generated about a 5% profit. Philip Morris, which is also about almost 5%. And then we wanted to get into a new long Q trade, an option position, an outright option position. And then that was pretty much what was going on. So we've done some pretty good work using the indicators. These are the tweets that go out. So I understand a lot of you may not get those tweets, but if you sign up for the Twitters, you can read through that and see what's the content that I send out. Is it worth you getting those tweets? And I think you'll find out it really is. We do it for two purposes: for our clients, that in case they don't have they're staring in front of their email and they have their mobile app, they said, hey, we just sent an email alert out for our subscription-based product, and you can get out or follow, at least understand that something's happening here. So that's the gist of things, of what's happening, and we're going to be looking forward to seeing the continuation performance of these strategy settings on the VIX product. Let's take a look at a couple other ones that I mentioned in the webinar. One is gold, and the difference between the version on your left and the version on your right, you'll see the profitability is about $2,000 difference. Well, let's take a look at the differences. We just released Person Algo Optimizer number 15. So this is on the one on the right is the performance. Not bad, pretty for a day trade system. Once again, the settings here, just review. For commodities, we have it set at number 3, which means it does only 2 contracts. So from the beginning of the year, and you can see where this is, from January 1st of 18 through March 9th of 18, what's the performance of this strategy? And you will see the performance is a nice left to right upside movement. It's up approximately, let's have a little bit of drawdown because it went long 2 contracts right up in here, and as you can see, it's taking about $1 worth of heat on 2 contracts. So you got a little downside action drawdown, but we just hit a new peak equity high close to around 25,000 as of earlier today. So let's take a look at the performance summary. 114 trades year to date. Okay, 114 trades year to date. Profit factors close to 2 to 1. Probably could get better. All right. Now, what's the difference between that and the one on your left? The one on your left, we're going to see format strategy here. Person Algo System number 15. That's right. This is the 15th version because we've worked out bugs. We've tried to refine things, and we're going to take a look at the performance of, and you'll say, it looks pretty similar, John, just the performance is off $2,000. I mean, it went short here, and you'll notice it's been short, the same kind of thing. It was long and caught that updraft. This was long and caught that updraft. So a lot of the signals are very similar, right? A lot of the signals are similar. What's the difference in the overall performance? Well, let's look. And the first thing you'll notice is that, wow, it has over a 2.11 profit factor, number one, and the biggest identification of knowing what's going to be the biggest difference is that it took not half, but it took a lot less trades to get almost the same type of performance. So some people like more trades, more profit. Some people like less trades, about the same profit, and a profit factor greater than 2 to 1. So the point of me sharing this with you is that the version number 15 has come out and helped to refine and reduce filtering noise and false signals on our gold model. All right. Now I just switched over to our Amazon trade and our Amazon model using the same situation. That's why these are side by side, because we've done a lot of back testing. We did a lot of testing, beta testing before we released this to our clients, but Here's a very similar, extremely similar situation that gold, except for what's wild about this is that for Amazon, 60-minute swing trade model, the profits over time, you can see, is just slightly a little bit better. And so the question begs is, notice that this was long, trailing stop, it got out, and it's flat, and the market continued to go up. Versus this is still long. How do we know? Well, first and foremost, the open trade equity is flat. The open trade equity is still in a position. So for Amazon, the position's still long and has a trailing stop function carrying it forward. The difference is, as I will share with you, is that this is the original version, and if we go back over here, you'll notice, just so that you can see that we're not confused, this, the one on the left that has the better performance, is number 15, the latest version. So the filtering mechanism, while gold has reduced its trade and reduced profits a little bit, for Amazon, it's actually done better in terms of a slight profitability. So this is what's so dynamic about this product, and I just really am pleased with what took me and our partners years to put together, and a lot of work, and all our efforts from everything that we've been teaching through the years has been validated, and to say, hey, can a trading system or algo optimization help a trader be on the right side of the market? And I think the results speak for themselves. No matter what product you're trading, a state-of-the-art VXX New Millennium type product, or whether it's gold futures, or whether it's Amazon as a swing trade model. Thank you for watching, and if you have any questions, simply send us an email or call the office at 561, and I'll put that out there for you, 561-655, and that would be 1881. Look forward to hearing from you guys. Thanks.